The summer months are generally a time when the markets take a breather as vacations become more important than work. You may want to be a little more selective on your trading opportunities and ensure that there is actual volume involved in the markets that you trade. The summer is also a really great time to check in on the results that you've had so far and just to see if you're trading consistently according to your plan. Have you been consistent with risk, position sizing, and keeping your focus on the trading method you've tested and shown to have a positive expectation? Now, there's a very good chance that you've not been consistent, and when faced with losing trades, you've either switched trading methods repeatedly or worse, you ignored proper risk protocols. Maybe you've let your emotions get the better of you and it's been a downward spiral ever since. Even professionals have bad spells, but most of them find the ability to pull themselves back up and regain their professional approach that has led them to success. Now, the good news is that as long as you've not blown out your trading account, there's still time to become professional in your approach and perhaps finally reap the rewards that you know are available in the markets. Now, you don't need groundbreaking ideas to turn your trading around. Oftentimes, complex solutions do worse than simple approaches, and in many things, especially in trading, you want things to be as simple as they can be while still providing the results that you seek. Number one, focus on one trading method. The internet, the trading blogs, social media, and all things electronic are really great, but they come with a price. The ready access to information overload is an ever-present risk, and in trading, more is not always better. Emails are crammed with system marketers that have unlocked a trading secret that's been tucked away in vaults for decades. And on a lesser scale, an article or a blog post about an indicator setting has caused many traders to add that to their trading toolbox. Watching YouTube trading videos and how other traders perform can cause many to simply abandon what they're doing, and then they try to mirror what they're watching. From personal experience, too much information can oftentimes cripple your decision-making process. And I've had occasions where trading setups occurred according to the plan, but I failed to execute. Why? I would start adding in other factors that had absolutely nothing to do with how I was trading at the time. I was stuck in analysis and second-guessing, and the price would just travel on without me. And it's a disease. Better said, it's a dis-ease with the method that you're currently using because they're not getting the results that they want. Specifically, they're not getting the results that other traders are getting. The turtles are a really great example that the system is not the main component of success, but the person using it is. Comparing your success or gauging your potential success on someone else, it's not something that has any merit. In fact, this comparison can be a direct blow on your self-esteem and give you an unfair criticism of yourself. The failure and the success of others has nothing to do with you. Pick up 2 to 3 trading methods or systems that coincide with your goals, such as day or swing trading, and run a backtest with a random data sort. The ones that have potential, forward test them, and the one that fits you, it's the keeper. Take yourself off email lists, stay away from trading forums, and just filter out all the noise, the news reports, the talking heads that have no effect on your system. And when I did this exercise, I didn't need the open and close of the candles, for example, so I used bar charts instead. And there's a lot to be said for noise elimination. Continue your testing and only commit real money when you have a proven track record of success with whatever method you choose. And while sim trading is no substitute for being in the market, it does give you a framework in understanding your system of trading and the potential that it holds. And the key is really just to focus. The second one is follow a rigid capital exposure plan. Going for that big one with a position size that is having you risk multiples of what your plan calls for will more than likely blow your account. At the very least, it will set in motion a pattern of haphazard trading with the mindset of a hobbyist that has little chance of success. Now, this is one habit you don't want to have to contend with. Approach exposure like a professional from the beginning, and don't try to load the boat on a trade that is destined for massive success. Is your equity curve pointing south? Don't try to turn the corner on the next trade. Realize that the markets will be here tomorrow, and you can just chip away at the losses. There is another day to slowly turn the curve in the right direction. Now, commit to a modest 0.5 to 1% exposure per trade or something even smaller. Just make it small enough that you can withstand blows to your account that come from foolish mistakes and trades that just simply lose. Set an amount that you will have for maximum account exposure across all open trades. Now, this is really, really important for Forex traders who can easily be trading 3, 4, and 5 currency pairs at the same time. Now, not everyone has the same risk tolerance for themselves or their trading method, so any suggestion is just simply a rule of thumb. Your situation may allow for lower or higher risk, but just ensure that whatever the risk amount is, that you can withstand multiple losers in a row without too much of an adverse effect on your trading account. You're welcome to download this Capital Growth app, which will track your account growth and even how and when to take withdrawals from your trading account, and it's free. The third one is review your performance every single day. Quite frankly, this is something you should be doing anyways, since the first day you cracked open a chart. This is so critical, and it can alert you to issues early on that can really devastate your chances of success. And I used to use a free screen recording software, Cam Studio, to talk through trades, and I even did recaps of my daily performance. And questions that you may want to ask are, did the trades follow your method? Walk through your entire trade from start to finish. Was my capital exposure plan on point? Did I exit the losers according to the stop? Did I stretch profit targets based on hope and greed? I also print out a chart of setups and the completion of the trade. Now, even though it's just as easy to use a screen capture software such as Jing, I still prefer the hard copy. Making notes right on the paper, I feel, makes a huge difference in knowledge retention. And for those of you who really like to dig deep with numbers, you can download this free trade tracker software to get all those details. Now, these 3 steps may seem really easy to do, and that's good because they really are. You just need the intention and the discipline to do them. Trading it's one of those rare professions that success or failure, it's all on you. It's not the fault of your broker, your charts, the talking heads, or the Fed if you fail. Trading does not discriminate, and really, it's up to you which side of the finish line that you want to end up on.